guest speaker. Our guest speaker for today is Lien Pham. She's a New York Life representative, life insurance agent representative. She offers a variety of products that can help you. Oh yeah. Before that, I'm sorry, I'm still learning the tradition, right? Okay, but Kim, you know the tradition, right?
Yeah.
Okay, we need to step out of the house before we talk about you, so you don't hear what we're talking about. So coming back to it, Kim is a New York Life representative. She offers a variety of products that can help you meet the numbers of insurance and financial needs, including but not limited to college, funding, retirement, and lifetime income strategy. Kim, my notes here, helps people fully analyze their needs and recommends appropriate solutions. So with her presentation, you will meet this wonderful lady who has a true passion for her industry. You will learn everything you have wanted to know about life insurance, but not afraid to ask. So without further ado, let's give a big round of applause for Miss Kim.
Louder! Come on now! Big warm welcome!
First of all, thank you everyone for being here today. And I'd love to meet all of you, each of you personally later to get to know more about you. So first of all, let me introduce a little bit about myself. Maybe some of you haven't done one-on-one with me yet, but I came from Vietnam, and I grew up there, and I went to college in Japan in 2002. So I lived there for 5 years, 4 years in college and 1 year working. Then I moved here 5 years ago. So that's kind of background, my international background. My passion is protecting children. I love kids, and I think protecting children and their future is our mission of everybody, not only me, but that is my passion about. I love the children, I love young families who have, grandkids and kids and young kids. So and to be in this career I feel fortunate to be able to learn knowledge about finance, and I have an opportunity to educate people, even from young people to even older people, with the knowledge about what I have learned. Especially from New York Life, they have a good education and training system. So I love to be here today to talk a little bit about what I have learned, and I love to share with you all. Life insurance is out of sight, out of mind thing, and not many people think about it, and they don't want to think about it. But it's important, especially when it happened to you in your life, and you realize, it's good to plan. So to start, let me ask you one question. What do you think is the average expected retirement age among Americans?
67.
67?
65.
65? 68? And when do you think you want to retire? When do you think you will retire? Well, some people already retire.
Tomorrow.
You live above your means.
Oh, man.
How about you, Ray? Ray, right?
Yeah, if you live above your means, you can retire.
Yeah. So are you retired right now? Half?
Semi-retired, right, Ray?
I'm not at the age of fulfillment yet. I'm still there.
So when do you think you will retire?
I don't think I will, because if you help others, just like paying it forward, you feel good and you feel extend your life. And that's how it works.
You don't want to stop working.
Of
You
course.
want your brain
It's
keep
a-
working,
It's a
right?
great feeling if you
Uh-huh.
help others.
Yeah.
Or
How
give
about
others.
how about Liz? Do you think you will retire?
You know, 15 years ago, I thought about retiring around the age of 55,
Okay.
okay, and that was my goal. Well, I'm
I
past
think
50.
that was the same goal with the young, I was like
Yeah.
Sarah or me.
Yeah,
Yeah.
you know,
26.
throughout
26.
the years, that has changed.
We're past that, my friend.
Because the economy has changed, the work field has changed, you know, and I'm past 55 today, but I don't feel 55. So my outlook about retirement has changed, you know. So instead of using retirement, I look more as the financial nest that I'm willing to settle for a certain age, and also to include my lifestyle.
So is it about the financial problem that stopped you from retiring?
No, the financial problem would be, what is it that I want to decide upon the amount to be? Because I'm like Ray, I don't foresee myself not working. You know, I have good health, and I have a vibrant, you know, energy, and I have a goal of creating throughout my older years. You know, so retirement, the vision of that in itself has changed. You know, so I'm looking at something different in regards to how much money do I need to be comfortable, but yet still be productive.
Yeah.
You know, because retirement isn't retirement for me in my definition and in my lifestyle today. So,
Well, to my definition, retirement is with 365 Saturdays, right?
Can I mention a brief story here? This is regarding my father. This is in my younger days when I had some of my friends come over, you know, when I was living with my parents and stuff. And one of my friends noticed that my father worked a ton of hours, kind of like I do now, kind of followed in his footsteps. And he said, Dimitri, Mr. Melas, you know, when are you going to retire? And my dad, old school Greek guy, he's like, when I'm 6 feet under. And then 3 years ago, when my father passed away, God bless him, you know, trying to live in his footsteps, that same old friend had the nerve at the funeral to say, well, I guess your dad's retired now. You know?
We took notes.
So yeah, I think a lot of people are just, they get bored if they stop working at a certain age.
Exactly, yeah.
Yeah.
So some people even they ready to retire financially, but after a year or two, they go back to work because they want to work. That's a different reason, right?
or they die.
Yeah.
No, I know friends who have retired, you know, and they worked really hard, and they bought all that life insurance, and they had a wealth of money and everything, and they died a couple of years later. I mean, that's reality. That's true.
I think around 30% retire or before 60 or something like that. Yeah. How about Sal? When do you think you will retire? I'm
Never.
not saying you want to, but when will you think?
I don't know. I'll ask me again after 5 years. Yeah, it's hard. It always, the definition always changes. It's an open-ended question.
Yeah,
Yeah.
that's true. Okay, so you know, yesterday New York Life Insurance Company, they posted this question on their Facebook page and asked people to vote. So the most people say 68, you know, because you maximize your Social Security benefit at the age of 67. Do you know that if you would, you can withdraw, you can take it at the age of 62, but your benefits are gonna reduce. So if people patient and can wait until they're 67, they have other financial fund to help them out when if they retire earlier than that, then they get the full benefit at age 67. So people think that the best age is 68, but the reality is most American people now, we did a research and it shows 64. So it's even before 65, which is the average retirement age that Social Security used to offer. So it's really concerning right now because people tend to retire early. Um, but only like, do you know that only 40% of middle class of American, they save only 25,000 by the time they retire.
Wow.
So that's sad, right? I mean, if you're not ready financially, what do you rely on? Social Security, and how shaky it is right now, especially in the future like us. Yeah. So I personally think everyone should have the retirement they deserve, whatever the standard they want to. But everybody deserves because they spend their whole life, working and contributing for the society. So, but the key word is still planning, right? Planning. Each of us has our own planning, and we have to plan ahead, not like close to, retirement. I love the saying, nobody planned to fail, but they fail to plan. Yeah. So, for young folks like, around my age, I know that retirement seems like so far away. This can be like 40 years, 30 years from now, but at least like save $10, $15, $20 a week, so you can save up to $100 a month and put in an IRA. If you think that it's too far away, if you have a kid, you can aim for a college fund for kids. You can save like $10 for a college fund, $20 for your retirement. That's not a lot. If you go eat out, it's already more than $20 for dinner. So save on the side, put it in an IRA instead of in the banking account where you can see it, you can spend it. The saving account is for you to spend, not for you to save actually, because you can see it. Put somewhere else that out of sight that you don't see it. Put in an IRA, and then and especially like for the kids for college fund, I think they deserve to have a good college time. I tell you my personal story. I went to Japan to college, and luckily I got 100% scholarship. So my parents didn't have to pay anything, and I didn't have to work hard, so hard for the tuition. But my family was doing okay in Vietnam, in my country, but they cannot afford to pay my dorm. It was so expensive in Japan. And after like half a year, they called me and say, I want to support you, but we can't afford to pay for your dorm. Can you move out and share a room with your friends? And I said, okay. It's better to stay in the dorm because it's convenient, it's close to school, library and stuff. But I'm okay. And then I went out and I worked part-time because it's closer to to the town if I moved out. So I moved out, I worked part-time, and 70% of my time was working. I didn't have time to join other activity, other club, that I wanted to. But the thing is not because I didn't have enough money, but I didn't have time. Because those activities, they need persistence to join, and when they hang out, and I didn't have, can't afford to eat out all the time, right? So most of the time I work and study. So I was like, I wish that I had more time so I can learn, I can hang out with Japanese friends so I can learn better Japanese, right? So it's all opportunity, and it's something that I missed, and I regret it. I mean, but the thing is, I learned a lot from my part-time too. So, but I had a wish that if I can afford, I want to leave, I want to give my kid a fun college time that they deserve, right? So go back to America. Let's say if your kids can afford, eligible for financial aid, they need money to buy book, right? You need money to stay home. So, if you have a grandkid, you can help them out for their college. So, and I feel lucky because I got 100% scholarship. But for those people who didn't have, the financial aid, then it's good to help them out a little bit. So, I mean, as a parent, just save a little bit, a week, a month. It's gonna accumulate a lot at the end, and you didn't notice. Some people would plan, like at least like when the kid was born, not until like they're 15, and you look like, oops, there's only 4 years left, and I'm not ready, but they are ready. So, so why I'm talking about IRA, why I'm talking about college fund, but not saving, put money into the saving account, put money into the bank. Well, the key is the tax deferring. So not many people know this, but you lose a lot of money if you put money into the bank and CDs. So if you save money to buy a car, a house in 3 or 5 years, that makes sense to put in the bank. But I have client who have like 500,000 put in a bank, and I asked her how long have you put in there? She said 20 years. And I was like, why? And then she said, because I like the teller at that bank. And I can go visit
like the
her
partner
often.
that day.
And I said, oh my God, that is really not a good reason to put money in the bank, 500,000, And she could do a lot more, with that, with other funds. So, and like if you are self-employed and you want to save money extra for your retirement, your IRA can help you deduct tax right now. So they will deduct it from your gross income. I don't give tax advice. You can ask with your CPA, but that's what I help people. If you set up an IRA before you file tax, before April 15, you can get deducted tax from. Yeah. So I want to do a quiz with you all. I want to ask a question like this. I don't know if some of you may know this, but they call it the value of a dollar quiz. So let me ask you, if I have $2, I go to Vegas and gamble. I forgot the game. If black and red.
Blackjack.
Roulette. Roulette.
So I have one chance to win between two, right? Black or red. So 50-50%. Yeah, 50-50 chance. So if I put $2 and I put in red and I win. So next I will get $4. Is that correct? So if I put all in again in red and I win 20 times like that, do you think how much money I'm gonna win after 20 times in a row? I'm winning.
Yeah.
How much?
$80.
I'm sorry?
$80.
$80?
Much more than that.
Every time.
You're multiplying every time. You're doubling.
16 double is 32,
Oh.
32 double.
64, 128,
20 times like that.
256.
A million? More. Any objection? Any other idea?
That'd be a lot.
Yeah. 1,048,000.
$1,048,000.
40,000. And I'm saying 500 and those numbers. Okay. So let's say I go to the wrong
Lucky 7 and trading 35 to 1.
casino. I go to Uncle Sam casino. I have to pay tax every single time I win. That's the reality, right? You win lottery, you have to pay. And let's say my tax bracket is 28%. That's average, right? So after I win $2, I got $4, right? Oh, actually, I start with 1. So 1 become 2. So 2 after 28%, I only have $1.72 left. And then I invest 172 and play again. So I only win like $3.40 something cents, right? Okay, let's do that 20 times. If I win 20 times, it's like exactly the same at Uncle Sam at casino. How much do you think I want to win at the end? You got the right answer last time. $1,000?
Maybe it's like $20-some thousand.
20-something thousand. Any other guess? Just yes.
The odds are against you in a casino.
I'm sorry?
The odds are against you in a casino.
That's a Len Walter
That
answer.
is for sure. Okay, so the answer would be 51,000. Do you know you lost 1 million if you pay tax every single time? That is what we pay for when we put into the bank, you know, and all those. So even if you win 1 million and you have to pay tax at the end, because you cannot avoid tax. You don't pay now, you pay later, right? So you pay 1 million and then your tax bracket is 28%. You still have 700,000 in your pocket.
Yeah,
That's a lot.
yeah.
Yeah. Yeah, so I will pass you this one. Sam, can you help me pass this? So you can take it home and check to see what I say is correct. They do, no, just this one. Just one, yeah. So you can check that they did the calculation 20 times. So you can see the value of, you know, the tax deferral is the power of it. Well, how, next I want to go, okay, so go back to the topic that how life insurance can help your business. The life insurance, the thing is, the money in the life insurance, it grow with tax deferred, like II, you know, 401k and Roth IRA, other kind of retirement plan. But the good thing is you have access to it, you know, without penalty. You know, when it's liquid money, like you put in the bank, you can take it out in emergency to buy a car, to buy a house, it's for your college fund, and you don't have to get penalty like you put money into the 401k. For example, I think most of you here are self-employed. Is anyone partnership? So how about self-employed?
Self-employed?
Uh-huh.
Yeah, we're all pretty much self-employed, right?
Yeah.
Yes.
Yeah. So, you know, like, for people who want to have like self-employed, but they have like son or daughter in their business, you know, if they want to leave their business to their kid, and what they have to face is the estate tax that the kid has to pay to get the business, and what the life insurance can help them pay for the estate tax. Or for example, if like, let's talk about partnership. If you have, you know, someone have two people in the partnership. For example, there's a real estate company, like two realtors, they partner together and they do business. So if what happens if one person die or disabled, then the other person is gonna have to buy out the other part, right? Then or the wife has to step into the business, but you know it is the other partner doesn't want to work with the wife. What happens is they have to get the money somewhere to buy the other share of the ownership. So the life insurance on the death of the partner will help them to pay off the other share. So we call it a buy-sell agreement for partnership. You can do that if you are, you know, self-employed and you wanna, you know, you wanna sell your business later, because now you're not thinking about it, but later you build your business the whole year and all these years, and you know the purpose is later if you wanna retire, you wanna sell the business, right? Most of them think that. But then it's not that easy, because when you sell, who you're gonna buy, and you know it might not be the price you want it to. So it's good to plan ahead. If you have someone that's interested in your business, talk to that person, make an agreement. If they already know how much your business is worth, you can sell it, and with a life insurance or with a buy-sell agreement. And with it can structure and you can use it as your retirement income from that insurance agreement as well. So if you have any question in detail, I can help you out later. But because we have to close. So last word for me is I hope you enjoy the last 30 minutes and learn something new. And after leaving Sonoma Chicken on the way home or driving to the next appointment, you can ask yourself this question: when was the last time you reviewed your financial situation? Was it a long time ago? Was it like when you were 18, when your mom, I don't know. I had a client, but they have kids. They have 2 kids. They're dentists, they're doctors, they're self-employed. Their business worth like $1 million, but they only have 50,000 on their life insurance. That was bought from their parents when they were born. Think about that. And do you think that you got enough insured, or do you want to deduct more tax every year by putting saving for your retirement? So if you haven't reviewed your financial situation for a long time, sit down with a financial professional. It's set like financial advisor. They normally charge by hours, but I know most of them give you free, financial consultancy. And choose someone that you're comfortable talking with. Talk about your role, your plan, your need, more than people want to sell you something, right? Because it's all about you. It's not about them. And if they help you, they have some, something in it. But you have to feel comfortable to talk about those things that normally you don't talk about. So okay, hopefully it helps. Thank you for everyone. I have here my newsletter, and I want to read it to everyone. I hope that it's especially for business owners, so hopefully it will help your business, according to finance. So, is there any question?
Okay.
For a life insurance, what is the lowest monthly amount that anybody would be able to put in?
Well, it depends on what program you're going for, but the lowest it depends on your age and your health and condition as well. So it's hard to tell. If you can give me some age, I can give you,
Well, most of the people that now should get life insurance and start saving are about in the 30s and 40s because they don't have anything and things have shifted with the economy. So now they're starting to become aware. So they're in between 30 and maybe 50. So if you're 30, I am aware that it would be less. It's just some people don't have the income to maybe put aside $50 a month.
Yeah.
So is there any other way that they would be able to actually participate and get it started?
It can start from like $11, but it depends on how much coverage you want. For example, if people want 250K, and it's gonna be less, and people want 1 million, right? And it depends on what program you choose for. If you just choose to protect your business, people